Hey, what's up YouTube? Alex here. In this video, maybe a little nerdy, a little theoretical, but I do think it's valuable and has been super important to me in being successful as a sports bettor. And it's basically just understanding how does a sportsbook work. Sportsbooks are market makers. They set lines. So for example, if you look at FanDuel, you can bet on either team. They're just setting the lines. If you want to bet on the Eagles, you can bet them. If you want to bet on the Chiefs, you can bet on them. FanDuel is just setting a market. That's their business model. They are market makers. They make money by charging a spread. So in this example, just Super Bowl odds, FanDuel is charging an 18-cent spread in their market. So long story short, I used to be a market maker. I didn't work at a sports book, but in financial markets, I worked at a trading firm called Susquehanna. I was a quantitative trader, a market maker. Again, I wasn't setting lines on the Super Bowl, but I was on pretty complex financial products. I was a market maker for calls, puts, for options. Long story short, so I have a deep expertise in kind of markets, how market makers work. And over the past 5 years, I started sports betting as a side hustle. I used a lot of the things that I learned at work, and that really helped me in a solid understanding of markets, really helped me become a better sports bettor. Last year, I made over $200,000. So long story short, I think this is really valuable to understand. I'm a big believer in investing in your sports betting education. You want to be the most educated sports bettor. I spent months researching professional sports betting, how sharp sports bettors, syndicates, how they make money long term, and just kind of diving into the math behind sports betting. And I think it's really important, right? Like when you're betting on a sports book, it's a zero-sum game. You're going to make money off the book, or the book is going to make money off you, right? There's no in between. You make money or the book makes money. So before going into war with these sports books, I think it's really important to kind of understand how they work inside and out. So that's what we're going to be talking about in this video. So we'll go through real quickly, kind of an example from the stock market. Nvidia stock, a popular stock. You can see it's currently trading in the market at 118.65. And all that means, 118.65, is you just multiply the stock price times the number of shares available, and that gets you to the valuation of the company, which is $2.9 trillion. Anyways, this may not seem that relevant, but this is kind of an example, basically an analogy for how a sports book works. So let's say I'm a market maker on Nvidia. It's currently trading in the market around 118.65. So what I could do is say, hey, what I'm going to do is I'll buy the stock for $118 or I'll sell it for $119. So I'm not taking an opinion, right, on whether Nvidia is going to go up or down. I'm setting a market. I'm saying I'll buy it at 118, I'll sell it at 119. I think that Nvidia is fairly priced at 118.65. So if I buy it at 118, I'm getting 65 cents of value. If I sell it at 119, I'm getting 35 cents of value. In the ideal situation for market makers, this is like a dream, is there's an equal amount of buying and selling. So let's say someone sells me 10,000 shares of Nvidia at $118. I'm 118 bid, I'm able to buy 1,000 shares for $118, and then I'm able to sell 1,000 shares, at $119. I just made $1,000, right? Like all I did was I bought from somebody, I took on the risk, and then I sold it to somebody else and made that $1 spread. So that's basically what a market maker is. You're just setting the market. In the ideal situation, nothing was better than when I'd go into work, I'd set markets, and there would be an equal amount of buying and selling. That's optimal because you just make that risk-free spread. So kind of an example of like how is a sportsbook a market maker. So, it's a little different from Nvidia stock, but if you look at Red Wings, Detroit versus Seattle tonight, you can see FanDuel's market is they have the Red Wings at minus 108 and they have Seattle at minus 111. So they have a 19-cent spread in their market. So you can imagine, right? Let's say you want to bet on Detroit, I want to bet on Seattle, and both of us are betting to win $100. So I'm going to be putting down $108 or you're going to be putting down, I apologize, 108 to win 100. That's minus 108 odds. You're going to be betting $108 on the Red Wings. I'm going to be betting, $111 on Seattle. Only one team's going to win if they tie. Honestly, I don't know hockey well enough. If you tie, though, we'll both get a refund. But regardless, let's assume they don't tie. The sportsbook, you bet 108 on the Red Wings. I bet 111 on Seattle. So FanDuel Sportsbook collected $219 from us. You bet 108 on Detroit. I bet 111 on Seattle. So FanDuel collected a total of $219. One of us will win, one of us will lose, and FanDuel will end up either $8 profit or $11 profit. So if Detroit wins, they're going to keep my $111 that I bet on Seattle, and they're going to have to pay you $100 in profit. You bet 108 to win 100 on the Red Wings. So FanDuel's up $11. I lose 111, you make 100, FanDuel makes $11, right? Just by getting equal action on both teams. On the other hand, if Seattle wins, I bet 111 to win 100. FanDuel owes me $100 profit. They took $108 from you. You bet 108 to win 100 on the Red Wings. FanDuel ends up $8. So basically, FanDuel has no risk. That would be the optimal situation, for FanDuel, is they get roughly equal action on Detroit and Seattle, and they just make that risk-free spread. They let, all the people in the world bet on whatever team they want, and then they just make a risk-free spread. So that's what I mean when I say sportsbooks are market makers. Now, the first thing I want to mention is, it would be ideal if I'm an Nvidia market maker if all day long there was an equal amount of buy and sell orders. But obviously that's not always the case, right? So for example, let's say my market is 118, 119, and all people are doing is buying. Buying. All people are doing is, taking my offer and buying an Nvidia from me at $119. Well, there's way more demand than there is supply, right? So my position is I'm selling a lot of Nvidia, so I'm getting short Nvidia, right? I now have exposure. If Nvidia goes up a lot, I'm going to lose money. So essentially, in that case, if there's a lot more demand than supply, your fair value needs to change. So if before I thought Nvidia was worth $118.65, but all people are doing in a lopsided way is buying from me at $119, I may adjust my market. I may say, hey, I actually don't think Nvidia is worth $118.65. I think it's worth $119, maybe even a little more, $119.50. So I'd want to change my market, right? So long story short, as a market maker, you're constantly getting feedback from the market. So by that, I mean, FanDuel's not stupid. Currently, they have the Red Wings at minus 108 and Seattle as a very slight favorite, a little more juice towards Seattle at minus 111. If all of the action is coming in on Seattle at minus 111, especially from sharp, profitable customers, if people are just hammering Seattle at minus 111, FanDuel may say, hey, we're being a little too generous with our odds on Seattle. There's not an equal, balanced amount of action coming in. So they may change their market from minus 108, minus 111 to maybe plus 100, minus 120, right? Money talks. So you can kind of think about it if everybody is buying, to go back to this Nvidia example, if everybody is buying Nvidia stock from me at $119 and millions of dollars, I'm just getting shorter and shorter, I'm probably wrong. I need to update my opinion that Nvidia is worth $118.65. Initially, I was happy to sell Nvidia at $119 because I believed it was worth $118.65. So I'd have a 35-cent edge on each trade where I'm selling it at $119. But now the market is telling me, no, Nvidia should be priced higher, right? Because all people are doing is lifting my offer and buying it from me at $119, so I want to change my market. And that's essentially line movement in sports betting. right? A lot of people think these sports books are stupid. They're not, right? Like, they're seeing all of the bets coming in and adjusting their odds accordingly. So I thought I had a simple example, and I do. This is for the Pacers, Trailblazers game. You can see the Blazers, this is the Pacers. The Pacers opened around like minus 217. Now, as we get closer to game time, the sportsbooks have moved them to being less big favorites, maybe around minus 190. So they've moved from like minus 225 to minus 190. So that's line movement in sports betting. So essentially, these sportsbooks, they're not stupid. A lot of people think they're stupid, but especially the big multi-billion-dollar sportsbooks like DraftKings, FanDuel, they're not stupid, right? They're seeing where action's coming in. They know where sharp, profitable customers are betting, and they can adjust odds accordingly, right? So if all of FanDuel's sharp, profitable customers are betting on Mahomes over and rushing yards in the Super Bowl, FanDuel's going to say, hey, we had Mahomes line at like 25.5, but everyone is betting the over. All of our sharp, profitable customers that have made money off us historically, everyone's taking the over. So maybe we should move this line higher to 28.5, 29.5. So that's kind of how a sportsbook works at the core. That's, how a market maker works. And there's a lot more to go through. But like as a market maker, there's a lot of considerations. So by that, I mean, you don't weight orders equally. So for example, let's say I'm market making Nvidia. Let's go back to that example. There's a difference between a bunch of retail investors, right, just buying Nvidia. Like there's some article that Nvidia is, the next hot stock and people start buying it. You may just think, well, these are retail investors, people buying it for their Robinhood account. It's not like these people have inside information or doing anything particularly complicated. Like a lot of times when I was trading at SIG, when I was, a trader, you'd see whatever stock was in the news, like if a big Bloomberg analyst or something was talking about a stock and was saying it's a buy, you'd get a lot of retail orders coming in to buy the stock. So, I'm not saying retail orders don't matter, but that's a lot different than if a hedge fund comes in, like a really smart big hedge fund and says, hey, we want to buy, $25 million worth of Nvidia at $119. Then you may say, whoa, maybe like Nvidia is worth more because there's this smart counterparty, this smart hedge fund who's saying they're willing to put down a lot of money and buy a lot of it. So FanDuel Sportsbook, not stupid, right? This is a $40 billion company and their entire job is to be expert market makers. They're constantly adjusting, their odds, ticking them around, line movement, due to betting volume, stuff like that. So for example, early line for tomorrow, FanDuel has Tyler Hero at 7.5 assists. The over is the underdog outcome. They're offering plus money, plus 106. If all of FanDuel's sharp, profitable customers off the open start hammering the over, all of the betting volume starts coming in on the over, FanDuel's not stupid. They're going to say, hey, maybe we're wrong, right? That's how markets work. Money dictates probability, right? So let's just assume the extreme. Everybody is betting the over on Tyler Hero. Sportsbooks are going to take that as a signal, hey, maybe we should either move Tyler Hero's line higher from 7.5 to 8.5 assists, and if action keeps coming in on the over, maybe they move him from 8.5 to 9.5. Or they can shift the odds, right? Currently, the over is a plus 106 underdog. Maybe the over, closer to game time, if all the action's coming in, betting the over, Tyler Hero over 7.5 assists, maybe by game time, the over will be the favorite outcome, minus 130 odds, minus 120 odds, something like that. So books can either, especially for player props, they can adjust a line, move it higher or lower based on where action's coming in. On the other hand, if everyone's hammering Tyler Hero's under, sportsbooks can move his line lower to 6.5 assists. Now, one thing to mention is being a market maker in general is amazing, right? You ideally can just get equal action. You're slowly moving around odds, shifting around lines, trying to balance action. And hopefully, in an ideal world, you get approximately equal action on the over, the under, the Chiefs, the Eagles, equal and opposite outcomes, right? And you can just make that risk-free spread. So that spread in sports betting is called the VIG or the juice, whatever you want to call it. That's the ideal situation for a sports book, is they get equal money on both sides, right? They just make a risk-free spread. What's better than risk-free money? Absolutely nothing. That's a sportsbook's business model, an ideal situation. But sometimes crazy things happen. So I'll give you an example. Is Nvidia stock recently crashed. I think it went down maybe not 20%, but close to 20% in a day because there was news of this DeepSeek company, this Chinese artificial intelligence company, an AI competitor, getting traction. So you saw Nvidia stock plummet like 20%. So sometimes, you can get screwed as a market maker because you can imagine everyone's just selling Nvidia. You end up being long Nvidia because you buy a bunch of Nvidia and then the stock crashes 20%. That's kind of the risk you take as a market maker, is you don't know things that the rest of the world knows. So I'll give you, kind of another example is, because it can be the same thing in sports betting. There's always new information entering the market, right? So maybe before news of DeepSeek and, this new AI competitor, Nvidia was thought to be worth $3.5 trillion. Now that there's news that, hey, there's this risk, there's this new company based out of China, DeepSeek, that's actually, pretty successful. The stock drops by 20%, the valuation goes down because the market is reflecting Nvidia is not as much of a powerhouse as we initially thought they were. So the company shouldn't be valued as highly, right? Because their tech is not as maybe unique or special as we thought it was. But regardless, it's kind of the same thing in sports betting. Sometimes there's massive jumps in a line. So for example, tomorrow, BAM, his points line is 18.5 points. Tyler Hero's line is 21.5 points. My assumption is if BAM were to, let's say, get injured, obviously, hopefully he doesn't, but let's say it's the morning, he sprains his ankle on, the walk to the stadium. I don't know. But if BAM isn't playing, Tyler Hero's points line probably will move up 4 points, 5 points from 21.5 to 25.5, 26.5, right? If the Heat don't have one of their top scorers in BAM, who's going to take on the scoring load? Who's going to be taking more shots in the game? Who's going to be playing more minutes? It's most likely Tyler Hero. So if BAM's out, you'll most likely see Tyler Hero's line jump higher. So the risk for a sports book is if they're slow to lineup news, injury news, stuff like that, sometimes they can get picked off. I've done that all the time in sports betting. There's been times where a player gets injured, one sportsbook is slow to update, and you're able to get another player prop in the same game, usually a player on the same team. You're able to snag an amazing line because the sportsbook, the market maker, hasn't adjusted quickly enough to new news in the market. So all of the lines on sportsbooks, they're fair with the information we have. Right? So for example, if we want to go back to the Super Bowl odds, if I pull them up right here, the Eagles are minus 120 favorites right now. Obviously, if Patrick Mahomes gets injured, right before the game, the Eagles are going to end up being the favored team. So that's kind of the risk you take as a market maker, is if FanDuel Sportsbook has way more bets from customers on the Eagles, and Patrick Mahomes ends up getting injured, all of those customers, now are going to have bets that look amazing. and FanDuel's going to be on the hook. If Patrick Mahomes is out, I don't know what the line on the Super Bowl would change to, but I assume the Eagles would be massive favorites to win with Mahomes out. So that's kind of the risk that, sportsbooks take, and especially in sports betting, every single day, especially in the NBA, there's a lot of lineup news, players sitting out, who's resting, who's probable, who's sitting out a particular game. All of this information moves around the market. So that's another reason these books are constantly, it's a full-time job for these sports books to adjust their odds, because every time a player sits out, that affects other player lines on the team. So these books really have to be on top of things as market makers. That's their job, to be staying up to date with all this information in the market. So sometimes if a key player gets ruled out, like let's say LeBron James, he gets injured and he ends up sitting out, that's new news in the market. Oftentimes what you'll see is sportsbooks pull down odds for the game, for the other players. They kind of run their models again. Okay, what should these player prop lines be without LeBron playing? And then they'll repost them. So maybe, I can't say this anymore, not Anthony Davis, he just got traded, but like Luka's line, let's say, is 27.5 points before LeBron gets injured, right? If LeBron gets injured, Luka's probably going to move to 31.5, 32.5 points. So what you'll see sportsbooks, market makers do a lot of the time, just like a stock getting halted, you'll see when there's crazy things happening in markets, earnings reports, stuff like that, oftentimes a stock gets halted. But you'll see sportsbooks just pull down odds for the game, and then they'll repost them. So I know this video was a little bit, all over the place. We're talking about Nvidia, we're talking about FanDuel, but regardless, sportsbooks are market makers, and understanding market makers, how they adjust lines. Long story short, I think what's really important to get out of this video is sportsbooks aren't stupid. They're constantly adjusting their odds, their lines, based on lineup news, injuries, where sharp action is coming in, where profitable customers are placing wagers. And just kind of understanding that, will make you a better sports bettor, a more profitable sports bettor. It definitely helped me a lot, is just kind of understanding how a sports book works inside and out. So regardless, if you have any questions, let me know, comment them below. I love this. I love making content about profitable sports betting. So let me know, however I can help you, that's my goal here. And thanks so much for your time.